Hello people, right, early start for me this morning. I just literally rolled over and woke up, couldn't go back to sleep, and thought, why not have a look at a few charts? So I've got a trade out of gold, but that's not the point of making this video. I also posted a chart looking at this XRP BTC, and it occurred to me, I started to write a tweet and I thought, no, why not make a video? And the tweet was going to be, because the tweet that I posted with this chart was that we have a three candle reversal down. So in order to validate the trade up, we needed a three candle reversal to the upside. And the point I wanted to make was that there are no holy grails in trading. The three candle reversal is all it is a statement of intent, in my opinion. It is a suggestion that this is the level we've got to break, this red candle here. Let's zoom in a bit. We've got to break that level there. It is a suggestion that the buyers, whoops, I should have put that on the high. Sorry, I'm forgetting I'm not on MT4. Bear with. That's the problem with running two different chart packages. Right, sorry, I've moved it to the wrong one. It should be on the red high there. I know it does snap to it if I do it properly, but we're not worried about precise pips at the moment. But that red high there is the three candle reversal. So what you've got to remember is that that's a downtrend: high, low, lower high, lower low. And then when that high is broken, it means we have a valid uptrend in place: low, high, high, low, high, high, and close. It also means that we have closed above a lower high, which means effectively we have broken the downtrend. That's what the close means. If we don't close, in other words, if we have a long wick and it fails to close above the line, then the bulls have tried and failed. Simple as that. And that is what we are doing continually. If I look at a line chart, I'm not going to change all the time frames and things, but let's look at this old one here. This is a trend: low, high, high, low, high, high. That's a swing trend. What we've done is we've closed above the level that just forced the price down. So a valid level of resistance has been tested and finally used as support. And that is all a three candle reversal is. If we had dropped from the H4 chart to an H1 chart, but I'm not going to do that now because that isn't the point of this video. The point of this video is to say that a three candle reversal is a statement of intent. This could easily have reversed back down again on the lower time frames and negated this break and close that happened here. So that is why, and this is the point of the video, we need to use every time frame. So the H4 may well close above here, above the yellow line, in which case we then have to watch the pullback on H1 and watch the three candle reversal try and reverse on itself on H1. So we will drop down to H1 now. Beauty about trading view is we've got H3 and H2, so we can actually, we don't have to, it adds, if you like, more complication to the method, but it also adds additional information, and trading profitably is all about having as much information as you possibly can, which is another point about these three candle reversals. So now we're on H1. God almighty, sorry about this, it's just switching from MT4 for the last 5 or 6 days back to TradingView. So we've got our descending trend line as well, and we've got an ascending trend line here. So as I just said, as much information as we can possibly have. So back onto the 3 CRs. So this is a potential touch point here. So it could come down further. That's what I'm trying to say with that. That's why I have these on there. They're also useful when you get down to, right down to M1, and you've drawn all your trend lines and you've watched all your three candle reversals, and you know you've got belt braces and shoelaces tied around your neck as well as you know, backup methods, if you like. So H4 three candle reversal, drop to H1, because it hasn't done the H4 3CR yet, drop to H1 and we expect to pull back. And if H1, 3 candle reversals down, then we must have a 3 candle reversal back the other side, because like the H4 is an H1 swing trend or an M30 swing trend. I prefer to see sort of 5+ candles between the 3CR and the swing. By that I mean, like, if you've got a M30 3CR, you've got 6 candles per M30 candle, so you've got clear swings. Okay, H4, the clue is in the word, 4-hour candles, 4 candles. I'd prefer to see 5 or 6, so M30 is a better way of looking at the H4 3CR on the fractal side of it, the lower time frame. Okay, so we've had an H4 3CR in our hypothetical theory. We now have to drop down to H1. Well, we drop down to everything actually, M15, M5. You can watch the pullback on M5 and then it will try and push back. Then it should come down and pull back on M15, and then it should pop back, and then it should pull back on M30. This is after the H4, remember? And this is how you learn the stuff. Go straight down to M5 or even M1 after H4 and just watch the price action doing its stuff. But, you know, it's always worth being aware that, you know, you could have an H4 pullback against the H4, which just means it's consolidation, serious consolidation. But if you are aware that the next time frame down is the likely level that will get tested, so you've gone from H4 to on MT4, you'd have to go to H1 and watch that do its stuff. Then it stops you getting in potentially too early, in my opinion. Another reason why I gave myself this strict set of rules to trade by, because I had to have a strict set of rules to trade by, otherwise I was useless. And that's, you know, I understood my problem was discipline and patience, so I devised a method to force myself absolute discipline and patience, and that's why the 3CR came about. Excuse me. So H4 up, expect an H1 down, possibly another H4. If H4 or H1 come down, then you have to negate them by a new one up, and so on and so forth. Okay, that applies for every time frame. Now, if the momentum to the long side is so powerful and they fail on an H1, then obviously, you know, look at the M30 and see what that's doing. If they failed to pull back on an M30, look at the M15. And, you know, if the M15 pulled back, then you need a new M15, and then you need to start the whole process again. You might come back and do a new M30 and a new H1 then. Don't just hit it willy-nilly. That is why I'll go back now to what I've just noticed the RSI histo's gone. I'll go back to my belt and braces scenario. These, you know, these are tried and tested methods. That's why this ascending trend line, I would expect it to potentially touch that. So even if it goes sideways for longer than we expected because of news, or, you know, we're way before the Frankfurt Open even yet. So this could go sideways, sideways, sideways until the big boys get in for their bonuses first thing in the morning. So that's it. Why discount tools that have worked for 100 years plus just because someone told you, oh, everything is about the wicks or something like that? So, yeah, have as many tools on your toolbox as you can possibly use without getting cluttered. You know, that's why I don't have any EMAs on my charts. They're so vague, it doesn't even bear thinking about. So, yeah, there you have it. 3 candle reversal is a statement of intent. It is not a carte blanche to hit the trade. It is just a suggestion that things might be changing. The balance between sellers and buyers might be changing on this H4 chart. And then, as I said before, you have your momentum. You have your levels to work off of, where, you know, over way on the left-hand side, this is potentially, it's not because I drew it on the right-hand side, but this is potentially an area on the left-hand side where the buyers have come back into the market, and the sellers have been overwhelmed. Here we go. That's the left hand side, that's the right hand side, but really we should be looking way over here, and as you can see, we are actually above a bunch of sellers. And if we look closely now, I'll explain why this is more powerful, because this has failed to even get down to this level, so this is less powerful than that. Okay, that's strong sellers, and as we've come back here, sellers have failed to get through this lot of sellers. Buyers and sellers have swapped over here, so we could have had a new level there. Very clear on your charts. Oops. There we go. A new set of a new valid resistance, because it broke that low, acting as now very valid support. Low, high, higher, low, higher, high. You know, this is a strong uptrend, and we could even, you know, extend that ascending rather, trend line right way across here, actually, connecting all those lows that have finally made higher highs. So again, this could come all the way back to this level, you know, so be prepared, always be prepared. And there is, you know, there's a resistance level there. These lot, force price below this lot, strong. So, you know, always look to the left of your chart to see what's going on. Okay, I've digressed a little bit, but the point was a 3CR is just a statement of intent. You have to use every lower time frame plus all the other tools in your toolbox to make sure that H4 potential long reversal is good to go. Okay, thanks for watching. Have a great week. It's Monday morning and it's not even 5 a.m. yet. Oh no, it is. It's 20 past 5. Okay, thanks for watching. Have a good day. I'm on a new computer as well.